Yes, so my name is Ruth Fees and I'm a local realtor. And today I have a special guest. Her name is Lupe Saenz. She's a financial coach and she's the owner of Money Renovations. So after coming out from her financial mess and going through the whole financial journey is what inspired her to become a financial coach and help others. Being married for 10 years with a combined family and 5 children. So she's here to talk about small financial moves prior to buying your house. So no further down, here is Lupe Saenz. So there you have it.
All right, awesome. Thank you, Ruth. That was a great introduction. Let me share my screen. I believe I have access now. Can you see the first slide?
Yes.
Yes.
Okay, awesome. All right, so welcome to our Zoom meeting, and thank you so much for joining us on this Tuesday evening. Armando, you're awesome. You're a trooper. Thank you for being here. Our goal is to provide valuable information on the steps needed to take with our money in order to position ourselves in the best way possible to convert our first home buying dreams into keys. So before diving in, this is where I was going to ask where you are logging in from and what motivated you to join us today. So Armando, since you are our guest of honor, where are you logging in from and what motivated you to join us today?
I'm in the city of Covina. I'm in a book club with Ruth. So, we talked about this event and I thought, yeah, anytime I can learn from someone smart, I'm there.
Well, awesome. Thank you for joining us. And I hope I live up to the expectations. So again, thank you so much for sharing. And again, our hope is that there is more clarity on the steps for home buying so that the people that get to hear this feel more confident on their journey. So let me start by asking, what does owning a home mean to you? Is it a lifelong dream? Maybe you have been renting for a while and keep hearing comments like, when are you buying? You're still renting, and the thought of buying your home has become your lifelong dream. Regardless of other comments you may hear from friends, family that may want the best for you, it is very important not to feel pressured into home buying or feel that you are falling behind because you see everyone around you buying their first home. Or maybe it means stability. I remember one day my daughter came home from school asking or telling us, my friends asked if we were a military family, and we asked why. And she's like, because we moved so much. So maybe that is you. You want to offer that stability to your family. Or maybe it's an American dream. Owning a home has traditionally been a symbol of financial stability and perhaps a success. However, when not done financially responsible, the dream can quickly become a nightmare. So it's very important that we plan for it. Or you simply want a place to call your own. There is nothing like having your own space, a space that you can remodel, add walls, take walls down, a place that you are motivated to work hard for. So these may be some of the meanings that homeownership may mean to you. And maybe right now it all sounds more like a dream. So let me first share a little bit about my story with you. In 2017, my husband and I bought this home. We were super excited because this home had a back house that was perfect for my parents. In fact, that was the reason we bought it. My parents had sacrificed a lot to help us, and we knew that that was what we wanted to do. So we decided to buy this home based on feelings. We loved the house. My mom fell in love with the back house, and that's how we decided to buy the house. So all we knew is we can afford it, and we didn't give it any much thought. So in 2019 is when our lives changed. 2 years into buying this home, my husband and I managed to get ourselves into a financial mess. The house we wanted some grass curving, and we wanted to redo the pond. So there we go, taking yet another loan. But there's more. The grass was dying. The water heater went out. The pool needed maintenance. The trees were dying, and the list goes on and on and on. To the point that we felt that all we did was work to pay bills, pay for house needs, and due to our commute Monday through Friday, 1 hour and a half going down the hill for work and 2 hours to get back home, we felt like we were just weekend parents. We hardly saw our kids. So in 2019 is when my husband and I decided that something had to change with the way we handled money and how we were making big financial decisions. Because although in appearance, it seemed that we had reached the American dream, in reality, we were both drowning in a pool of debt and high expenses. That weekend after my husband and I had that conversation, our church was offering a class on exactly what we needed. So we decided to join, and our lives changed forever. We implemented what we were learning. Through this process, my heart and passion to help others grew more and more. In a lapse of 2 years, my husband and I paid a little bit over $60,000 in debt. Now this home is a blessing. We were in the beginning, not the nightmare we were in the beginning, all because we made decisions based on emotions instead of assessing our financial situation. So which takes me to my next point, the importance of saving for a down payment. So saving for a down payment, how much should I aim to save? We suggest that even if you plan to buy in a year or two from now, to get pre-approved so that you have a benchmark of where you are, point A, and where you want to be. That way you can make that dream a reality. So we need to determine your budget. Getting pre-approved will allow you to know how much you qualify for, and you'll have a better idea of what your down payment should be. When you have a better idea, it will be easier to make your budget and determine how much you need to put away for this dream. And in a moment, we're going to be going over some of the important components of a budget. I suggest that even if you're qualified for a high loan amount, that you really look at your numbers and go with what it's affordable for you in your budget. So let's say you are qualified for $800,000 home loan, but in reality, you know that you can afford a payment for a $600,000 home loan because the kids are in sports, or you and your husband may have a gym membership, or you still plan to do vacations as you usually do. So, and so on and so on. So if you stretch your budget too tight, you may find yourselves in a place my husband were in 2017. So I recommend to really look at your numbers and be honest with yourself on what you can comfortably afford and still be able to do the extracurricular activities. It's also important to plan for other costs. When saving, it's important that we consider other costs involved, for example, closing costs, property taxes, insurance. The more we can plan for, the better position we'll be when ready to start the process. Having a trustworthy realtor by your side is key, as they can, as they can be there to guide you in this process. And I suggest reaching out to Ruth. She is an excellent realtor, and she can help you with this. Also, another important thing to remember here is to save to have your emergency fund. Aside from a down payment, you need to have an emergency fund available. These are 3 to 6 months of savings that would cover expenses, including house payment, in the event an emergency happened that you are unable to work. I cannot express the importance of having an emergency fund. It will not only put you as a strong borrower, but it will also give you the peace of mind through your home buying process. And third, understand your loan options. So your down payment can range from the following options. And as a disclaimer, I am not a home loan officer. So what I'm providing here is just general information to give you an idea of the different loans out there. Again, I suggest reaching out to Ruth so that she can put you in contact with a home loan officer that will provide you with more information on these loans. And in this meeting, we have one excellent one, Armando Novello. He is a home loan officer. So just throwing it out there. So the first one here, we have FHA, which is Federal Housing Administration. And with this type of loan, your credit may be as low as 500, but in this case, your down payment may be a little higher, maybe 10%. If you have a credit score of 580, you may qualify for a 3.5% down payment, and you will have a PMI in this case. And let me take a drink of my water. Sorry, guys, I'm a little sick, but here we are. Okay. And then we have conventional loans. With a conventional loan, you do need to have a better credit score. 620, but 680 is ideal. And with this, you may qualify for a 3% down payment. In order to avoid PMI, you will need to come out with 20% down. Or if you are able to come with at least 15% down, you get a better rate and a better rate on your PMI. And then I have a note here on the side that there are programs that will allow for down payments to be all gifted funds. But I believe that you have to have traceability for everything that you come with, because once you're on the underwriting process, it becomes very, you have to have proof for everything. Okay, next we have the VA 0 and the USDA 0. These two are more specific. The VA 0, if you are an eligible veteran, active duty service member, and certain members of the National Guard and Reserves, you may qualify for this type of loan. And if you have served or are serving our country, thank you very much for your service. VA 0 offers competitive rates, no down payment, and no private mortgage insurance, which is awesome. And then with the USDA 0, this is designed for eligible homeowners in rural and suburban areas, and they also offer no down payment and competitive interest rates. But again, these are just general ideas. Make sure that you do contact the home loan officer for more specific details. So saving for a down payment, I see it as beneficial for both parties, but especially you, the buyer. When you put yourself in a position of having 10, 15, or 20% down payment, you are not only lowering your loan amount, but your monthly payments as well. You set yourself for better loan terms. As mentioned, if you have a good credit score and come in with 20% down, you kick the private mortgage insurance cost to the curb. And it provides you with peace of mind, knowing that you worked hard to put this big sum of money together, that you'll be that much motivated to take care of your home and to maintain your home. As Ruth says, you have some skin on the game, right, Ruth?
Yes. Yes.
So earlier we recommended getting pre-approved for a mortgage in order to understand your current position. But what does pre-approval involve? So it involves a lender reviewing your financial information and credit history to determine the amount of money they are willing to lend you for a home purchase. You may wonder, what does a lender look at? So just to review a few of the items, a lender will look at your credit score. They will look at your debt to income ratio and your work history and bank statements. So with your credit score demonstrates if you are a responsible borrower. If you have a 680 or more, it's ideal. It's an ideal credit score. And what moves the needle either up or down, it's your payment history, your credit utilization, your length of credit history, your credit mix, and any new inquiries. So your credit utilization is from the amount of credit available to you, how much are you using? So this is what that means. And the length of history is for how long have you had your credit open? So you want to make sure that when you are in the process of buying a home, that that you don't do any new inquiries, that you work with what you have at the moment, because any new activity may affect you. And then what to do if your credit score needs improvement. Of course, I'm a financial coach, so the first thing on the list is budgeting and financial management, because it's very, very important to know how to manage the money that you are that you have coming into your account now, because if not, everything else can crumble down. You have to pay your bills on time and consistently, and reduce your credit balances. If you have high debt, that may affect you. Avoid opening unnecessary credit accounts and keep old accounts open. Don't close them if you're in the process. I would say wait until you already close with the house after you may close any accounts that you want to close. And then your credit score will also determine the type of loan you qualify for and the down payment. We went over the conventional loan and the FHA. Conventional loan, you do need a better credit score, and it has a 3% down payment. And then with the FHA, you don't need, you can go as low as 500, but you do need to come up with a higher down payment. Also, when you get pre-approved, the loan officer will look at your DTI. Excuse me. This is a calculation that shows how much of your income goes towards paying debt each month. So the way they calculate this is, let's say you have $2,000 on monthly debt payments, and your gross monthly income is $6,000. So you would take your debt payments, the 2,000, divide it over your gross monthly income, multiply it by 100, and then you get that percentage. I would say that to have it no higher than maybe 35%, because anything higher will put you at risk of not being qualified for a home loan. So you want to make sure that you do know this number, because this is something that they're going to be looking at. And of course, they're gonna need your proof, your government issued ID, recent pay stubs, or proof of income. They're gonna need your W-2 forms, your tax returns for the past 2 years. You need to prove that you've had a consistent work for 2 years. And your bank statements 2 to 3 months, and obviously your credit report. So, so far I mentioned that having a good down payment, good credit score is important. But evaluating your current financial situation is also very important. So we gotta make sure that you review your income, expenses, and debts, that you have a reliable source of income, and that you research the responsibilities that come with owning a home, such as property maintenance, repairs that will affect your budget. Because believe me, once you move into your house, there's gonna be those little extra costs that you weren't anticipating. For example, when you move in, when you close on the home, your first day in the home, guess what? You're gonna find out that some doors don't close properly, that the faucet and the sink faucet is broken. You know, so all these little things start coming up. That this is where having an emergency fund will give you that peace of mind that no matter what comes, you're prepared for it. So, and also creating a plan for your money. So the importance of having a plan for your money, or AKA a budget, is because if we don't have a plan for money, this is how we walk when we have no idea where our money is going, right? Like we walk with this foggy brain because we have those daily transactions going on. You go to the store, get Starbucks, you go out for dinner. And so if you have no idea or no plan for your money, then this is how you may be walking. And what happens when we don't have a budget, a plan, a blueprint for our money? what happens is that we are not able to see where our money is going, and it will cause us to overspend, go into debt, and have no savings. Because when we walk in life without a plan, or you wouldn't go to an unknown place without a map, right? So why would we go into making one of the biggest financial decisions, like buying a home, without a budget? To me, that's essential. It's very important. Okay, so three important categories for your budget is reoccurring expenses, day-to-day expenses, and random expenses. Your reoccurring expenses are your bills and everything and anything with a due date. And then your day-to-day expenses, random expenses, I'm gonna go over these in the next slide. Your random expenses, these are the expenses that happen randomly, may happen once or twice a year. Your car breaks down, medical expenses come up, or the water heater goes off. You know, those are all the types of expenses that when they happen big. And your day-to-day expenses. This is the category where most people think of when creating a budget. They think of their going out for lunch or their coffees. They think that they need to cut down on their coffee intake. And believe me, I have a problem with that because I love coffee. So, so when we don't have control of these expenses, this is what we end up having in our lives. And it's a chaos, right? And let me explain what this person is going through. So the black one, we know that it's our income. The red is our random expenses, and the blue one is our day-to-day expenses. So this person had a really nice bonus here. And guess what they did with that bonus? They went to a vacation because, I mean, come on, we all work very hard. We deserve it, right? So they went to a vacation, and as soon as they came back from that vacation, their car breaks down. And obviously they already spent the money. So this unexpected expense happened coming back from a vacation. And what do? They go and borrow money. And then that's the cycle that many of us live on. And I say it because my husband and I were there. This was my husband and myself. So and then along with the unexpected and your income, we have our day-to-day, you know, daily little debit swipes that we have going on. So through coaching, my goal is to be able to flatline these as much as possible, your random expenses and your day-to-day expenses. The only line we want fluctuating here is your income, because we want and need those pay increases. We want and need those bonuses. So that's basically the only line we want fluctuating. But the other two, we want to really flatline as much as possible. So through coaching, what I aim is to do this with my clients and flatline these as best we can. It's a process. It takes, because there's a lot more to it. There's a, you know, we all come with our own money, with our own mindsets about money, with the way we handle money. So this process is not from day to night. It's a process. So the way we do that is obviously by creating a plan for your money that works for you. So in summary, we're talking here about a 1 to 2 year plan for home ownership. This is to get you ready to make those dreams a reality. So just as a little review, first, you want to review your financial situation, your income, expenses, and debts. Create a plan for your money. Determine how much you can afford for a down payment and monthly payment, and get pre-approved if possible. Work on improving your credit score. Start saving for a down payment and closing cost. And I highly consider to save 3 to 6 months of an emergency fund. And connect with the real estate agent. And as the title of this presentation said, our goal is to help you with the process of going from dreams to keys. And make it a reality. Again, my name is Lupe Saenz, and I am here to assist you with creating a clearer plan for your money that will take this or any dream more achievable. So you may call me or visit my website, and I also encourage you to contact Ruth Feast. I had the opportunity to sit with her a few weeks ago, and I can tell you that she has a serving heart just like I do. So Ruth, take it away. You have the floor.
Thank you so much. Thank you so much for coming today, and thank you, Armando, to be here. So this is our first Zoom meeting, so hopefully this is not gonna be the last one. Thank you, Lupe, great insight. Thank you so much. Have a nice evening. If anybody has any questions, please email us at ruth@thefeastteam.com. So we have all your answers. And then also you have Lupe's email. What is your email?
It's lupe@moneyrenovation.biz.
If you have any questions, please make sure to send us, and then we'll respond to the questions that you might have. Thank you for coming, Armando.
Yeah, my pleasure. Thanks for having me.
Thank you,
Have a
Armando.
great evening, okay?
You too.
Bye-bye.